Hey, welcome to the Closing Beat, everybody. Happy Tuesday. It's not Monday, it's Tuesday out there. How you doing today? Hope you're having a good day and all is good other than your investments. If you're watching the stock market, yikes. It's supposed to go down while I'm not here. Friday we didn't do a show, and usually the markets go lower, and they did. But we continue today with the markets headed lower, so we'll see what happens. Any scroller thing at the bottom? No scroller thing? All right, let's get started. We got a lot to cover today. I got lots of good things. Anytime I get a few days off, I go crazy. I do a whole bunch. So hope you enjoy, and if you do, maybe you'll hit the subscribe button or maybe check us out at jazzwealth.com. If your financial advisor is not helping you, not talking you through all this, not making changes to your portfolios as need be with markets the way they are, then I hope you'll check us out. Come move on over to Jazz Wealth. We appreciate everybody who's given us a shot. I know we're a small company, and we're out here every day trying to prove ourselves to you, and I appreciate every one of you who have given us a shot. Let's get started. If you look on the right-hand side of your screen, you're going to see a lot of red. Today, you're going to see a lot of red. And we got a theme for the show today. The theme is when the markets or stocks that you're invested in do something odd, all I want you to do is say, that's odd. And then maybe come here. You can ask the question, Dustin, this seems odd. What's the deal with these stocks or with this market? And so today I'm going to highlight a lot of these things that have seemed odd and continue to seem odd. So we'll dive into that. But I just want you to ask that question because anytime people get overly excited, you tend to see things that are odd. In our research site, I've actually shown a whole bunch of things lately that seem odd. And we've been talking about it there. So I hope you'll check that out. Let's go over to the charts here and take a look. We'll start with the NASDAQ today. That was your biggest decliner, worst index performer of the day, down 4.3% all the way back to the 50-day moving average, working off a few weeks of gains that it saw there, getting really extended. Facebook, one of the contributors today, FANG names plus Tesla and Microsoft, those are all going to be your weak ones here today. Microsoft back below the 50-day moving average. Tesla, no, come on, you give me a couple days off. See what happens? Tesla back to the 50-day moving average as well. Just a lot of weakness in there overall. If I could plug the research site here real quick, I do want to share something with you. In the research site, on August 27th, I'll go back here, we were talking about NASDAQ stocks most likely to fall, and the day before that, the NASDAQ 100's new problem. And I've been sharing this with you, kind of pointing it out to everybody and our customers here as well. The stocks that were most likely to fall, I'll give you a little sneak peek here. Tesla ranked number 1. Inside the mix there, we talked about how Tesla was 100+% away from his 50-day moving average, or 200-day moving average, and the last time that happened, the stock fell 50%. Tesla's working on that 50% right there. So when you look at something like this, you go, that's odd. Tesla's 150% above his 200-day moving average. It doesn't seem normal. Let's look and see. Is that normal? And if so, what happens afterwards? And if it's not, what happens afterwards there? So something I definitely want you to check out. Also, Cody made his debut post today. Cody snuck in and made a post about the stock market falling, making these big gap down moves. What tends to happen afterwards? If you want to take a look at that, that is now live in the research site overall. If you want to take a look. The NASDAQ, by the way, is still up 20.9% year to date. So the fact that we've fallen here is more of a gift. It's not necessarily a reason to panic just yet. Yeah, we've shaved off half the gains since the last week there, but still up 20%, so not really anything to panic about just yet. Still very impressive there. I did point out on the closing beat, this is another one of those things. This is odd. We pointed this out on the 26th if you want to look at the closing beat and see the detailed explanation. Also on September 1st, if you want to look at our closing beat show and take a look at that, we said the NASDAQ was up 40%. That doesn't normally happen, does it? So we went back and looked at every other performance year up to the date, which would have been August 26th, to see how often do we gain 40%. Very rare, right? So when you notice things like that, you go, that's odd. The NASDAQ being up so much, maybe that means it's not going to stay that way, right? What's the deal there? There's something awfully odd going on there. So be sure to always take a look at things that seem a little bit odd. Looking at the Dow there, the Dow is now down 3.6% year to date. It held up the second best today. A lot of the reason is going to be because of Disney and McDonald's. Disney was actually positive, 1.5% on the day, and McDonald's there slightly higher on the day as well. Those two stocks were helping the Dow not be the worst performer. As far as Disney goes, they got an upgrade from Deutsche Bank, really on their Disney Plus exercise that they're doing there. That's going really well, by the way, since parks are not. And so you got the Dow holding up a little bit. I'll take a look at the Russell. The Russell was your best performing index of the day. It fell the least. Small cap growth was where all the excitement was today. It was the best area of it. So if you look at small cap, like the value stocks, your small cap mid index type funds like this, or small cap growth, that's where all the excitement was. So people willing to go put some money there, although it was still down on the day overall. On the bottom right hand corner of your screen, you see some of our recent FinTips videos. Got some really good ones this week. Today we actually covered large cap fund performance that you may consider looking at if they're in your 401k, so a little bit of a breakdown there. And on what's going to be Thursday this week, we actually are posting a video about the September performance to follow up with last week's video there. September performance in the stock market. Is the market going to finish higher? What I'm going to do is highlight how September typically performs, but we're going to look at performance relative to August as well. When August is really, really good, which is odd for that to do that, and I point that out in the video, that's odd that August was so good. What happens as September is going forward? So be sure to check that out on Thursday there, if you're interested in that. And I thank you for watching. Let's go over to the sector breakdown here for the day. It's going to be a lot of red on your screen. You got energy at what was the worst performing sector of the day, 3.6% down on the day. It's going to be because of oil. Oil lost 7%, finally waking up and getting started again in terms of overall volatility. Saudi Arabia lowered the price of oil for Americans as well as Asians for buying oil from them. Demand is low. If you look inside there, you're going to, no, Dustin. What are you doing, bud? Chevron overextended here to the downside, 3.6%. One of the bigger drags overall and very extended here. ExxonMobil, you could argue the same thing, though Chevron beats it. If you like the oversold stocks in the energy sector, Chevron's got to stick out as one that has kind of got that waterfall drop sort of working for you there overall. I'll move on to tech because tech was the worst performing area of the day. 4.5% down all the way back to the 50-day moving average. Apple is going to be one of the reasons for that. 1% of the losses in the tech sector today came from Apple. Apple has now fallen over 20% from its highs there, so a rather sharp and fast pullback. We seem to be seeing a lot more of that these days. Last Monday, did a video to hint at Apple's declines. We actually took some profits in our Apple here, but if you look, we pointed out how Apple was as extended as it has been from its 200-day moving average. I used a ratio chart to show that. Also put it in our Notes from Jazz email this week to say, look, when things stand out as odd, you've got to adjust. And so what we did is we've actually been selling our Apple position on the way up there in our funds. We manage our own funds here so we can make our own decisions about the investments that we have versus other advisors that buy mutual funds and things. So when you look at something like that, that's odd, right? Someone should be pointing that out. Someone should be adjusting that for you if it's not you. And Apple certainly stood out as odd. So did Tesla. We shared the same thing with Tesla there, and also in the research site as well. If we go over here back to the sector breakdown, in the tech sector, you're going to see Microsoft. Of course, we talked about that. Already weak. It was the second biggest contributor for the down day there. And I've been using this example with customers to say, these stocks have been doing the heavy lifting on the way up. What happens when they stop? Well, they have stopped. These 6 to 7 names have officially stopped lifting the market. There's now profit taking going on, and look what it's doing to the whole market. So this whole discussion, if you've been here with Closing Beat, then you know what's going on inside of there, and that continues, right? Just a lot of weakness overall from those names that are taking a break. Inside the tech sector, if you look at the semiconductor industry, breaking through the 50-day moving average today, I thought a couple stocks looked interesting. KLA 10 Core, CLAC, down 10% back to the 200-day moving average. Sharp decline just over the last 3 days, actually, all the way back to the 200-day, over a 20% decline. And maybe there's a little bit of support there. So something interesting, I thought, in the semiconductor sector in terms of finding new opportunity. Lam Research also looks very similar pullback as well, all the way to the 200-day moving average. Maybe something you want to look at there if you like semiconductors. Financials had a pretty tough day today. It was lower today because of a lot of the majors. And the majors meaning like your JP Morgan, your Citigroup, that was lower by almost 3% on the day. Bank of America down almost 4% on the day. This is a tough area to invest. If you're looking at the financials, it's a lot of chop and mess. And what is it? Are we going higher? Are we going lower? What are we doing? I would argue that pullbacks are still in a viable position down here. But for right now, financials very weak. And if you want to look at regional banks too and break it down even further, they broke the uptrend there. So starting to pull back in the short term, one of the worst days this one's had in quite a while. So I'm going to point that out. Transports pulled back 1.2%. That doesn't seem so bad. That's odd, right? Ask yourself that question. It doesn't seem normal. Everything else fell more than that. Why did the transports not fall as much? Well, airlines in particular had a decent day today. You got American Airlines, which was up the least and will be up the least when you have these strong days. They're in the worst position there. Maybe we'll make this our watch list tomorrow. But you got Southwest Airlines back to the 200-day moving average. You got Delta having a good day, up 2.4%. Morgan Stanley came out and said demand will return to pre-virus levels by 2021. Well, let's see if we can verify that in any way. If we go over to some data here, we pulled from TSA to show passenger throughput, meaning the number of people that are being screened in these, as you go through TSA, right? You check your bags, take your shoes off, all that stuff. Well, we're looking through Labor Day. This data is as of yesterday. It's right on time for Labor Day. Labor Day traffic is starting to peak back up. People are getting more comfortable to be on airplanes. They're willing to go out and travel more. In fact, in a week and a half, I'll be traveling to Cleveland because I'm comfortable to get on an airplane, and it was $17 to get to Cleveland, $35 to get home, so we're going to take a little trip because we can. Anyways, passenger throughput looking a little bit better there. So you could argue that Morgan Stanley's got a point, right? They were right to say airlines, maybe they're finding a bottom here because people are starting to go through the checkpoints, get on airplanes, go for flights and things like that. And the Labor Day holiday, while it's lower year over year, got people on planes. It got them to say enough's enough, put the mask on, get on a plane, go have a good time. And so there is a little bit more activity in there. And because of that, you got Delta, you got a lot of the stocks higher today. United was the only one that I noticed that was down compared to the others there. Otherwise, JetBlue looking good. You got even Allegiant, which is going crazy. They were up 0.5% there. So that was the main industry inside the tech sector that helped transportation stocks stay a little bit higher. So kind of an interesting lesson inside of that. And in fact, you could track the TSA throughput as well. You can look it up. It's all public data. We just chose to share it with you and see what's going on. That is the metric that investors are using right now to follow the potential performance of the airlines. So you got to look outside the box a little bit. Don't just look at individual stocks. Okay, we'll go to new highs, new lows. It's going to be a very bare list today. What we're going to do is actually break this down a little bit different. There were no new highs today, as you might imagine, but there were two new lows, two of them being Walgreens. They have recently been on our new low list as well. Today, they hit new 52-week lows as well. And then you also had Huntington. They made new 52-week lows in the mix. Those are your only two for the day. So what I did is I said, well, let's look through the rest of them. Which stocks in the S&P are closest to making new lows? You got Gilead Sciences. They've got 5% to go until they hit new 52-week lows, so they're hinting at it, but still a decent amount there. You got Wells Fargo just hinting at a breakdown there. It's 9% from hitting new 52-week lows. And Campbell Soup, with its little sell-off after earnings there, continues, by the way. They have about 10% until they hit new 52-week lows. Other than that, there's not a lot to report in that category. So we will move on to our watch list for the day and see what we can do there. Over the weekend, I was looking at the decline in the stock market and saying, is there anything odd that stands out, right? Remember, ask yourself that. That's the drinking word of the day. What is odd about the stocks in general when the markets fell? I'm going to share something with you here because this is really cool to see. Here is every single stock in the S&P 500 sorted by the two-day decline that they had. So if I go all the way to the top, all 500 of them, what happened during that two-day decline, meaning Thursday and Friday? What happened was some stocks did well, some stocks did very poorly. And what's the correlation there? How can we tell? Well, let's look at the downside first. So we go all the way to the bottom here. Here is the very, very bottom. NVIDIA was the worst performer, had the biggest loss. It was up on the year. This column here is year-to-date performance. Biomed, Qorvo, Zebra, all these guys had the worst performance, but they were all up nicely for the year. In fact, as you look at this list, you go, well, that's odd. Look, all these stocks are positive. The only stocks that are negative is DXC and Keys. There's a couple others that I highlighted. FleetCor in the mix there, and NRG. Maybe a couple more. Fleur, Waters Corp, and that's it. So these stocks were down on the year already, and they were also punished in terms of being lower over that two-day decline. So what that tells you is people believe, whether you don't even have to look at these stocks individually, figure out what they do and all that. You already know that investors think that these are the weakest of the group because every other stock that fell, look, all of them that fell were positive year to date. That's just profit taking. There's nothing odd about that. But the stocks that were already down and fell, okay, that's odd. So if you're looking at these stocks and you own them, you go, All right, I might have some weak stocks here. Let me do a little further research and see if these are ones that I want to keep. Now, if you go to the upside, let's look at this. All the stocks that were up, and you know this, you saw it. I mean, Carnival Cruise, Royal Caribbean, all these, it was kind of weird how these stocks were up, right? The biggest decliners for the year were the biggest gainers. So what could be odd about that? Nothing. That's just money moving into value. People saying, all right, I'll take some profits from one area. I'll shift my profits over to take a shot on something that may do well, maybe not, but it's the house's money, so I don't really have to worry about it. So what stands out here is what's odd? Stocks that were up year to date, but still did good, right? Over that 2-day decline, meaning they didn't sell off. They actually gained while the markets fell. So you got Constellation Brands, consumer staples type stock, you know, beer, wine, things like that. Archer Daniels in the mix as well. That's odd. Seems a little bit weird there that those stocks would be higher. They were already higher and they gained. Notice how every stock here is down year to date that did well except for a few of them. I'll go through and look at a few more. You got Eli Lilly, Cabot Oil, Brown. They're all higher year to date and they were higher during the decline. So that's telling you that people are looking at these stocks like this financial company here and they're saying those aren't so bad. They're already up and I don't want to take profits there. I want to move money to those stocks. That's what investors are doing. I'm not telling you to do that, right? So that's got to stand out as odd. Why was every other stock that was down year to date up last week, but only a few of them were up year to date and up during the decline? So that's got to stand out as something that's really, really odd there. So I put in those names. You can see them on the watch list off to the right-hand side of your screen there to take a look at some of them that were up while the market up year to date and the market's up over the last 2 days. And then those here down at the bottom that were up year to date but were down over the last 2 days. Those have to stick out as odd to you, and that's the name of today's closing beat. The theme overall, what is odd? That is how you pick through that. And very likely I'll post all of this on the research site. It's kind of a lot. I got to do like 1 million screenshots, but it gives you an idea of how do I analyze this? How do I take a look and see what's going on there to find odd type positions that I may be interested in or interested in running away from? All right, there you go. So that's the watch list for the day. Let's take a look at stocks in the news. You got a lot going on. And then if you have questions, I'll be happy to take your questions. If you want to post them in there, I'll see what I can do. First, you got Apple. So Apple, Goldman Sachs came out today and said Apple's probably a pretty risky play at this current valuation, $2 trillion, now under $2 trillion. But they basically just said, we don't think it's something we'd recommend to our clients, so Goldman Sachs coming out with that. You got Beyond Meats, one of the standouts today, up 7% on the day. They have an agreement with China now where they can do plant-based production in China, so good for them, picking up a little steam there and a good day for them. Nikola, I know you guys like your Nikola there. Up 40%, almost up 50% at one point today. Nikola is going to partner with GM to build the trucks that they're promising the world they're going to build. That's what they needed. They needed a partnership there because they don't have factories. They don't have the ability to produce what's on paper right now. And GM says, tell you what, give us 11% of your company that doesn't make any money, but maybe will in the future, and we'll help you make these trucks, right? So they're going to make these Badgers, the trucks that they're putting together there. It's good news, right? So I've been bashing on Nikola a little bit, but finally, they've got some good news here. They've got a light at the end of the tunnel. Tesla down 21% back to the 50-day moving average. They didn't get added to the S&P. The S&P came out and said, we've got some stocks we want to add, and everybody was like, here it comes. And there was no Tesla, actually. So what they said was, we're going to go with, there we go. They said, we're going to go with Etsy. Etsy down a little bit on the day. We're going to go ahead and go with them. We're going to come over to Teradyne. We're going to include them in there. We're going to include, we're going to include Catalent. All right, this is going to be awesome. No mention of Tesla. So stock a little bit lower on that news there. They got, what do they call it when you don't get the Oscar, the write-off, or the snub. They got snubbed. So anyways, Tesla lower on that news. Stocks that are coming out of the S&P are going to be H&R Block. This is a company in the S&P that currently has the most debt of all the companies. It's incredible how much debt they have, but you know they're leaving the S&P. You got Coty. These guys make makeup and things like that. It's a manufacturer of makeup for all the popular brands that you've heard of. They're basically where you go if you want to make sell your own makeup brand. Kohl's up 0.5% on the day. They're getting booted as well from the S&P. So you've got Etsy, Teradyne. You've got H&R Block, Coty, and Kohl's getting kicked out of the S&P 500. Lastly, I'll mention Peloton. It had a good day today, up 6% on the day. Got an upgrade at Telsey from 82 to 105. They think it's going to 105. This is kind of gutsy because they've got their earnings coming up on Thursday, so maybe something to take a look at there. Speaking of earnings, tomorrow you've got Abercrombie, GameStop, reporting earnings. You got RH, which is Restoration Hardware. That's what they want to call themselves now. And Zscaler, ZS, is the ticker symbol if you want to take a look. Earnings coming out. Not earnings. Dividends coming out from CME Group, paying out 85 cents. Travelers keeping their dividend, paying out 85 cents, I believe. PPL Core is what they call themselves now, 42 cents. And Newmont Mining is paying out the quarter for participating. There's also a lot of changes in the S&P 400. Lots of changes there coming up. That'll all happen, by the way, on the 21st of September. Oh, yeah. Do you remember? Come on, man. Best song ever, is it not? All right, let's take a look here, see if I can answer some of your questions, and then we will get out of your way. I'll try to come over here, see what we can do. What's your opinion on the SoftBank theory? It's not a theory, it's what they did, and totally allowable, and anybody could do that, I guess, if you had enough money. Not a theory. They actually did it. Yep. I love it. You're down 9% on Walgreens with new 52-week lows today. Yeah, it's time to exit with the loss. Well, you got to determine that ahead of time. Anytime you take an investment, you are in anything you do in life, right? You have a proposed return. It's not guaranteed, but you have a return you're expecting, and you have a max loss you're willing to expect. So if you're saying, I'll risk 9% to make 20%, and I'll wait 6 months to get it, you put that together, right? So work on that. It feels like if you're only down 9%, that's not too bad considering what's happened to Walgreens. Yep, I get it. I totally get it. What are some of the key features you should be looking at when choosing a portfolio tracker? A portfolio tracker, I think you mean like just modeling it. Should be available inside the platform you use, I would imagine. Right? If you're using like one of the bigger brokerages out there, you should be able to put together that and any data metrics that you want, like a Thinkorswim or something. J-Dub, also a very good song. Yes. You just can't go wrong. You put horns in music. That's what's wrong with America these days. I don't care. All the other stuff is we can fight about, but you need more horns in music. Real horns, man. I love it. Chart the yearly support. Yeah, so a lot of times if you are a longer term investor, we use the daily charts here just to kind of show you day-to-day activity. But if you're a longer term investor, you're not using a daily chart, you'd be using a weekly or monthly chart to kind of see broad, bigger picture trend there. Yeah. Oh, yeah. You mentioned once that the 200-day is good technical support when it is flat. Can you explain why that is? A trending 200-day moving average tends to happen, whether it's up or down, when the stock price has too rapid of a move, right? And so when you have like a Tesla, you've got, or Newmont even, you've got really too sharp of a move in the 200-day, that lets you know that the price action over a day-to-day type period is just moving away rather rapidly and pulling the average. The 200-day moving average, as you can imagine, is a hard average to get to move unless the price is accelerating rather quickly. So what happens is when people don't use it as support as much when it's trending because it indicates something that just, it was like a blow off top, right? Or the stock's taking profits. The excitement is over. The future performance has already been priced in. The discount is not as good as it would have been. So you want that really slow and boring type move if you're a long-term investor. Yep, I love it. I love it. Still looking for an entry point on Dollar Tree. You like your Dollar Tree? What am I doing here? Come on, man. You can't. I just can't take any days off. So I like Dollar Tree in this area here, right back to the 200-day just a little bit. You got prior price support in there, back to where it gapped up from earnings. So it's tough to say that you're just going to magically turn around, everything's going to just be good again. But as far as getting a little short-term discount, I can't imagine much under 85, you know, unless things get really, really horrible there. Yeah, I like it. Thoughts on entry point in Diamondback? Careful here. This is, you know, it's extended. It's not a Chevron. It's not an ExxonMobil. It's in a whole different category here. So this is one where I would actually, and I know I said this a lot lately, I would let it recover a little bit first, show you that other people are coming to buy this, watch it on a day where Chevron and Exxon are higher or the sector is higher. Is Diamondback also higher? If that's the case, then you know you've got that broad sector buying there. You might be more excited about it then. Okay. Hey, yeah, lighting looks a little better today, huh? I like it. I like it. All right, I'll wrap it up there. I appreciate you guys hanging out with me today. Hopefully it helped and you learned something. We did a lot today, so hopefully we'll keep that up throughout the week. Maybe tomorrow's watch list will be organizing the airlines in some way, you know, to kind of see which ones are in the most trouble. We all know Americans in the most trouble, but how do we define that? How do we analyze that? So I'll take a look at doing that if we get some free time to do that, and I'll wish you a great rest of your day. Thanks so much for watching, and adios.